Now, because in the wake of Britain's vote to leave the EU, it is those financial equities and the currencies that have really told the story of investor sentiment. On Thursday, we saw the top share index, the FTSE 100, again though, proving its resilience, edging a little bit higher at around its highest level in a week, having completely rebounded now from that substantial sell-off that we saw on Friday and earlier in the week. It means that despite all of the market turmoil of the last week, the FTSE 100 blue chip set to end June up 1.8% for the month, its biggest monthly gain since October, helped by its substantial stock holdings with international exposure. And therein lies the big difference when compared with the more UK-centric FTSE 250, which I can't show you, but I can tell you is still down about 0.12% and remains down around 8% over the last week. And a similar story over in Asia and on the other main European bourses this night, all ticking up slightly. In currencies, sterling, that's also up around 0.2%, putting distance between that 31-year trough, though, of $1.31 that we saw touched on Monday, but it still lost more than 6% in the quarter. Well, there's also another crucial question in all of this. What kind of trading relationship will Britain have with the EU following Brexit? The UK has set up a government task force to prepare for these exact negotiations. So what are potential options on the table? First is what's often described as the Norway model, out of the EU but belonging to the European Economic Area, or EEA. Now, it would give almost complete tariff-free access to the single market. It's the option which is most similar to the status quo, but as Angela Merkel reminds us, it would come at a cost, because as well as paying into the EU budget and accepting the majority of EU law, European leaders have said that it would need to accept free movement of people. Now, this could be a real sticking point, because immigration was a central issue in the UK's debate to leave the EU. Then there's option two. The UK could try for an association agreement, or AA, giving partial market access. But there are big questions over whether this would protect access for London's financial services market. Now, without either of those options, Britain could try to rely on World Trade Organization rules, but exports to the EU, they would likely be taxed. For instance, US cars sold in the EU have a tariff of 10%. All of that being discussed in World Business Report in about 10 minutes' time.